Housing Finance for the Next Billion, Emerging Needs, Challenges and Opportunities. So we have a presentation, Making Housing Markets Inclusive for the Low Income Segment by Ms. Nupur Maroti, Manager Housing Finance Systems, Habitat for Humanity International. For this, I request Nupur to please come on stage. Nupur? Oh. Yeah, I'm calling. You come. I request Mr. Kandan, Specialist in Housing Finance and Low Income Housing, Indian Housing Federation. Please come on stage. Mr. Jiji Mammen, ED and CEO Sa-Dhan, he'll join us in some time. Mr. Ramesh Kumar, Chairman and MD LaRaksha Impact Finance Enterprise Private Limited. Mr. Jayesh, Shah. Ms. Shruti Gonsalves, MD and CEO SEWA Grih Limited. And Ms. Mona Kachhwaha, Partner UC Impower. Please join us. Such a small crowd, if we can come a little closer and clap for them, then it might be an interesting session, because roti, kapra, makan is our basic needs. And we are talking about housing here. No matter how rich we are, housing is a very integral part of our lives. So we can talk, we are talking about housing here. Over to Nupur, please.
Okay, good afternoon everyone. So before we begin and talking about housing, I want to raise a question. What is the first word which comes to your mind when we talk about house? When I say, what does housing mean to you? Yeah, I mean, what is a house? Yeah?
Resilient.
Resilient. What? Security. And any other thoughts? So yeah, there are so many thoughts related to housing. Even like if I think about myself, I'm like, house, yeah. I want to get done with this session. I want to do the talking, go back, take rest. So house is something which gives us comfort. And it's a place where we feel peaceful. It's responsible for our economic development, socio-economic development. Very important for families to thrive. So I would like you all to keep this thought in your mind while we discuss this entire session. So housing is so important, but you know, there is an issue, there is a challenge. There are around 1.6 billion people. There are around 1.6 billion people worldwide who do not have adequate housing. And when we say adequate housing, it doesn't generally mean that absence of a unit as a house. It could also be simple retrofitting requirements, could be requirement of, you know, getting a roof just repaired, maybe a floor, or adding a room to the existing property. Could be anything. But there are people who do not have that. And to do this, we need a finance, we need around 16 trillion US dollars to flow into the market system to make that change, to make adequate housing possible. And around this, about 3 trillion is going to come from, it's what the research says, that it is going to come from public funding. It is also going to come from developmental funds. But 13 trillion is supposed to come from private players. So that's huge, how huge the opportunity is. And when we say affordable housing, we are talking about the low income segment. And this segment, like if you talk about India, we have around more than 86% of the people who are just above the poverty line, and they are economically active. So a market which can be tapped into. Now moving forward and talking a bit more about what we as Habitat for Humanity is doing in this space. So we are an international not-for-profit, and we are trying to make changes, we are trying to make difference, and we are trying to do something in the shelter space. Whether it is building homes for very poor, low-income households, making the entire structure for them, that is, we are impacting the community, or it is working with the market value chain players, working with the construction suppliers, material providers, laborers, masons in the space, working with the housing finance systems, financial service providers, and we are trying to also work with the policy regulatory part of the entire ecosystem. So we do a lot of policy advocacy also. So when I am saying that we work on all these areas, it is we are working around 120 countries globally. And an offshoot of Habitat is Turvillager Center, where we are trying to bring in capital in this space, because without capital, nothing is moving, right? So to scale up business solutions, to scale up housing solutions to address this challenge, we have these 3 pillars. We work with the building materials and construction practices, where we are engaging with the ecosystem players in the market, in the value chain which leads to construction of homes. We are working with the financial service providers, be it banks, microfinance institutions, be it housing finance companies, affordable housing finance companies, fintechs. We are also working with budding entrepreneurs. We are trying to help them, raise capital. We are helping them as mentors, so that, there is something which can be done in the construction space, and something which can make these solutions affordable and can be scaled up. So I'll just give a glimpse about the housing finance work, because most of us here are interested in the finance part of it. So our finance work in India, we have been working in India since 1983, and we have worked with all types of microfinance institutions, small, medium, large, and the partnership is still going. So the idea is we work with them as technical partners. We help them build business models. We help them do pilots around housing products, so that they can scale up these solutions. And apart from providing this technical assistance, as I told you, finance is a need. So we also have Microbuild India and Microbuild Global Fund. So Microbuild India works as a HFC and provides retail and wholesale loans to the financial service providers to push the agenda of housing. And at a global scale, at a global level, we are also working, we have also had a fund called Microbuild Global Fund, which was established as a demonstration fund, so that we can push for more capital to flow into this space. And today, after 12 years of the fund, we are actually harvesting the fund, and with the money which is coming in, we are also harvesting a lot of insights and knowledge. The knowledge which we have gained shows that there is huge space, huge opportunity, and it's not just the microfinance clients or graduated clients, but there is a huge opportunity in the sense that if we target more newer clients in the urban space, rural migrants, the urban poor, and then there are a lot many opportunities even now, emerging opportunity like the gig workers, the platform workers. So housing is for everyone, and housing needs could be satisfied for so many people in different ways and different models. So after doing so much, we still see that there is a gap, there is a lacuna, especially in the segment where we say that a ticket size of 1 lakh to 5 lakhs would satisfy a low-income household. We don't see enough of products here. We don't see enough of business solutions here. So it's a huge gap. And with this, I would like to hand over to Mani to take it from here and speak more about the challenges and opportunities in the housing space. Thank you.
Thank you, Nupur, and thank you for giving the opening context in terms of the work which Habitat for Humanity does in this space, and Turvillager Center in particular has been doing like phenomenal work. So I think we have here in this room some answers to the questions which we just heard, because what we are looking at is a problem which is very common. We are not going to go too much into this, because we are assuming that the people in the room understand what we are trying to say, housing as the end product and finance as a means, a key means to that end. So just to get an understanding of the scale which we are talking about in, say, in the Indian context, if we even take the Pradhan Mantri Awas Yojana, the urban and rural context, we are talking about 1.2 crore houses on the urban side and 2.95 crores on the Grameen side. And just to break that urban number, 75 lakhs on beneficiary-led construction, which is self-built incremental housing, and another 20 lakhs subsidized greenfield. So about 1 crore of houses on the urban side. And on the Grameen side, about 2.5 crores of self-built incremental housing, like typical housing which we would probably not see in the metros, but then pretty much in the rest of the country. And most of the global south, that's the core product, like self-built incremental, in some places, some subsidized housing, greenfield as such. So what we are looking at is also not a segment which is traditionally whatever classified subprime or wherever. We are talking about a set of clients who have the ability to repay, they have the incomes and ability to repay. They may not, in most of the circumstances, have the documented evidences to pay, to show that their ability to pay is substantiated. So that is one challenge, which we will probably see today, also in the experiences of our colleagues here in the panel, has been cracked to some extent. Like we have evolved in the last 10-15 years several initiatives in small, medium scale across the country, where it's clearly demonstrated that this families without documented sources of income, but which has ability to pay, can be kind of serviced. That's one. Second thing where we will see a challenge is on the security. Like security, again, is not going to be like clear black and white, like how we see it in the formal space. So we need to do some kind of innovation there. There again, you will see some experiences in the discussion today. And we are talking about broadly a ticket size of 1 lakh to 5 lakhs in Indian context, right? Like, so let's break it down so that we are clear as to what is the segment we are talking about. We are talking about not documented, but then with ability to pay. So if we are assuming that the formal financing system, formal housing finance system is targeting and serving the top 20% of the population, and even if we assume that the next 50%, which is like top 70% have the ability to pay, we are talking about that segment. We cannot say the formal system is not servicing this segment, because we will know, probably we will not acknowledge beyond a point some amount of microfinance, unsecured income generating loans are also going for repairs, renovation, house building in multiple cycles is one way. Gold loans in some parts of the country, loan against gold, is being used as end use for housing. So it's also from the formal system, just that it is not in a shape and form which traditionally describes mortgage. So we're talking about that segment. We're talking about security, which is not like clean, but it's still up there. There is equity in the property of the family. So that's the segment. We're talking about 1 lakh to 5 lakhs, self-built, incremental, or subsidized housing through government programs and stuff like that. So this is the segment which we are talking about today. We'll see what the challenges are, how have some of the experiences been, and what can be done going forward. So I'll probably have a set of practitioners in the all veterans in their own right and merits. So I'll start with Shruti ma'am. Like you've done it for the past decade or so. So why don't you tell us like what your journey so far has been?
So thank you Mani, and thank you Sa-Dhan for giving us this opportunity. So essentially, to my mind, housing or a shelter is one of the basic need in any human being's life cycle. However, having said that, the form of credit which mortgage finance requires basically also requires for someone to have that kind of income stability. Whether you are self-employed or you are working as a contractual labor, or whichever way one wants to look at it. And therefore, an access to home loans, even in case of formal loans that people like us tend to take it, we take it towards the time when we are able to afford those kind of loans. So in the credit continuum, first of all, it is all about the livelihood credit or the microcredit or the microfinance, which is what the larger community over here would be catering to. And then comes the kind of livelihood loans one requires, whether it is through a vehicle finance or through gold loans, as Mani mentioned. And thereafter, one goes for mortgage finance. So it virtually happens towards the later part of the credit continuum. Now, having said that, we are part of SEWA, we are a SEWA product, and that means Self-Employed Women's Association, and hence the focus on economically weaker section or the women who are working in unorganized sector is something which we strongly believe in. And that is where the genesis of SEWA Agrarian lies. Having said that, when we started this journey, the idea was to look at the people who have access to microfinance, and thereafter what kind of needs do they have for home repairs, home construction. Now, one interesting part which briefly Mani also alluded to, most of the time, in the entire experience of SEWA network entities, whether it is for microfinance or water and sanitation loans or any kind of credit which was provided to this segment, it was realized, and there was a study done by SEWA network itself, 40% of that loan went for home repairs. And that is where the compelling argument happens that most of the people who are self-employed, and therefore in this kind of segment, economically weaker section or unorganized sector, they tend to use home as a workplace, whether it is to produce goods or to store goods. So any part of their sort of supply chain of the livelihoods that they are engaged in, they tend to use home. And therefore the importance of safe and secure home is very, very important. Our journey as housing finance company began in 2015 itself when we received the HFC license. But that is where the story begins, that as a social movement, as a SEWA, we did not have the access to kind of capital which is probably available to people who have promoted housing finance companies as a bank or as a large corporate. And that's where the importance of like-minded investors who can provide you with patient capital comes in, because housing finance is a patient business. We give loans for a period overall at an average tenure of nothing less than 11 to 12 years. And therefore, the importance of having the right kind of people, right set of investors, right set of lending partners is extremely crucial in the journey of any housing finance company.
Thanks, Shruti ji. Like, I think it's one example of so it's done. Like, it's not like we are talking about a utopian concept. Like, someone who has done it, and they've done it well, and doing well as well. So another gentleman, Mr. Ramesh Kumar, has also done it in the recent past and in another avatar last decade. Sir, your experience on, especially the unique products, how did you even come up with this whole roof loan product? Or tell about your initiatives.
I was visiting my family, with my family, on my farm. This was near Pondicherry, close to the coast. This was in the year 2011, and we were subjected to one of the severest cyclones of the decade, the cyclone Thane, which made landfall at 165 kilometers per hour and caused extensive devastation in the rural countryside. I was in the thick of it, looked around for the next 15 days all around the area, the kind of devastation, the kind of shelters being uprooted, in terms of roofs being blown away, etc. At that time, I was having the idea of starting a rural housing microfinance venture by combining the best practices of microfinance and the needs of rural housing finance together. That is how I pioneered the housing microfinance sector through a platform called Swatantra Housing Microfinance, and came up with some innovations which were the pillars of the model in terms of incremental housing finance, where you did not look at the house as an organic whole, but looked at it as a set of modules, and one or two modules could be financed in one loan cycle. So in multiple loan cycles, the dream house could be built. This also gelled with the psyche of the rural population. The concept of paralegal mortgage was innovated, where we said if documents of title, foolproof documents of title are not there, still it is possible to finance a house building activity through using the community acceptance of ownership and possession, and using certain supplementary documents and the panchayat, village panchayat or the village assembly, which could be leveraged to create a paralegal document, and based on the document which could be mortgaged, loan could be given. This was again a revolutionary concept, and we were successfully able to implement it for over 4,000 such households who would never have got any loan from any formal financial institution. We brought in best practices of microfinance into housing finance in terms of group lending, social collateral, etc. So all these things were there, and I thought that this would serve the purpose. Over a matter of a decade, or I would say 7 or 8 years, we ran this, and we ran a successful housing microfinance model. Then again, I experienced a few other cyclones. 2016 Varda cyclone, which hit Chennai city, where I was at that time residing, and then the Gaza cyclone, which hit the coastal areas of Nagapattinam and Vedaranyam in Tamil Nadu in 2018. And seeing again the damage, I realized that even though we were working at the bottom of the pyramid with a housing loan, which was maybe a 2 lakh rupee loan, at which we were able to take care of the needs, shelter needs of many of the people, there were certain missing elements. One, that the devastation itself caused a loss of not only safety and security for these households, the hygienic and health challenges for education of their children, and also the cost of repair every year because of such heavy rainfall and cyclone, which would erode any possible savings that they had, and also sometimes push them down below the poverty line. So there needed to be a solution for this. On top of this, my experience in rural housing finance, also I saw that 30% of the applicants who needed upgradation in shelter very urgently, they were ineligible and rejected because they didn't have the repayment capacity even to repay a loan of 2 lakhs or 2.5 lakhs or 3 lakhs. So this segment was going to remain shelterless or with inadequate shelter for significant number of years going forward. That is the time that I got this idea that we need to come up with a new innovation beyond whatever innovations we could try out earlier, for meeting the needs of these people who are in the missing house loan segment, a segment which has missed the house loan. They are not destitutes where the government would give them free housing. They are not having enough income to be able to take a significant size of a loan to go for a new house. So they were falling between two stools. That is when the idea of a dedicated roofing loan solution came to my mind. Why roofing loan solution? Because the roof is the most vulnerable part of a house. It is also the most consequential part of a house. If a roof is bad, the shelter quality is bad. And if a roof can be upgraded, a significant upgradation of the shelter quality could happen. So with that idea, I said that I need to work on a dedicated roofing loan solution. That is when Terveliga Center for Innovation and Shelter of Habitat for Humanity International, they got in touch with me, and when I shared this idea, they were very excited and they said that they would be willing to support development of such a loan product. So we did extensive survey in 2 coastal blocks of Tamil Nadu, which are highly cyclone prone and with a heavy rainfall. We picked 16 villages, 300 households, and did a detailed survey. First, assessing the need itself for replacement of roofs. Second, is there such a product available with any formal financial institutions or microfinance institutions in the area? Thirdly, whether the loan size would be appropriate and they would be in a position to repay that loan, and what would be the willingness to go for such a dedicated loan. And with the help of TCIS, we were able to complete this survey successfully and found that on all these parameters, the initial assumptions or ideas were proven. So we said we will develop a dedicated roofing loan product. While as a lender, we would have just developed a loan product, put in some parameters. TCIS helped us in imbibing the design thinking in our team, so that we developed this product on a very scientific basis with the support of their technical consultant whom they provided, with a design workshop where the grassroots ideas were taken up and then used in the product design. They also helped us add a few more dimensions to the roofing loan initiative, such as creating awareness in the community for disaster resilient roofing and disaster resilient housing, creating awareness of other eco-friendly products which were available in the market and which could be tried out as alternate products to the conventional roofing material. And with all of this support, we were able to design an exclusive roofing loan product, which had, it was not just a financial product, it was an initiative with a package, holistic package of financial awareness and knowledge inputs and technical training inputs for skill for masons and fabricators in the local area, so that when they do a roof, they would do it scientifically and with a better standard. This is how this particular initiative and this product, roofing loan product, was born. And we are happy to share that we won the Asia Pacific Housing Forum Innovation Awards for inspirational practices for this.
Great, sir. Great work, actually. Like, it also talks about the collaboration. We really miss Jayesh, Shah of Svatantra, MHFC here, who could not make it to this panel. But then I can imagine what he would have told if he was around on this panel. A similar example with Habitat for Humanity, as part of Jaga mission in Orissa, they are kind of supporting self-built incremental housing for people who received land tenure rights as part of the Jaga mission, using housing support services by Habitat for Humanity, and they've run a fairly successful product. But then why we are bringing this up front in this session is, like, you're clearly seeing examples of people who have already done it, demonstrated, it's working fine, right? Like, so then where is the problem, or what is the problem? Like, that's what, right? Like, see, but then we still after this many years, 1,000 crores, right? Like 10,000, 5,000, 10,000 customers, but then India, 1,000 numbers do not really help. Like, we need lakhs and we are talking about crores, right? So here is where the real issue is, that we have demonstrated models, which is all working fine, collections are great, customers are happy, the products are stabilized, it's all demonstrated, right? But then what we are really, the elephant in the room is the scale, and which is why we are talking about this in this room, because the segment of customers is this customer, a typical MFI plus customer. And we saw the opportunity, like I read recently somewhere, we're talking about 25,000 income is like 90% of the population is below that. And that's the segment which we are talking about. So, sir, this is to you, Mr. Mammen. Like, how can MFIs play a greater role in this segment? Because we have the proofs of concepts, but we are looking at scale. And what do you see for MFIs?
Yeah, in fact, thank you for raising this question. I do feel that MFIs are definitely can play a main role as far as the housing is concerned. If not on a large scale, at least on a smaller houses or on an incremental basis, constructing on an incremental basis, supporting on an incremental basis. So that is definitely possible. Right now, the issue is that microfinance institutions are mostly they are what do you call remaining with a very limited products. Mostly, group lending is what they look at. So, in a group lending model, giving something beyond a lakh or so is not a viable proposition. So, at the moment, we find that the MFIs are comfortable giving a loan through the group mode and collecting it without any difficulties. So if that kind of an approach is to be changed, then only the housing can really pick up. In fact, we in Sa-Dhan, we tried to create that kind of we initiated a project in 2019 before the COVID set in Orissa in Puri. I think LaRaksha was also part of that project. And we had a couple of other partners also which partnered with us, and with the help of DFID, the UK DFID UK support, we tried to develop a kind of a product for the microfinance institution which can be used by them for supporting this housing activities, housing financing. To some extent it was successful, but then as I said, it was just before the COVID. Probably when the COVID set in, things did not go fully or did not completely, we could not complete it in fully. But to whatever the kind of thing we did or we have understood is that MFIs definitely can play a role. Only thing is that they need to look at developing that kind of a product within themselves. At the moment we find that some of them are into it, but then they may not be calling it as housing finance. They provide loaning, but then, as I said, it could be in the form of a group loan or a small individual loan, but then it is limited to, it is given in the form of some other means, but then it could be used for this housing purposes also. Water and sanitation is another area which we are already supporting, which many of the MFIs have started adopting. So, and housing and sanitation becomes a part of the same thing. So, I'm sure MFI can play a role. At the moment, what our data says is that around 1/4 of the MFIs in the country are providing some means of funding to the housing activities. Yeah, around mostly in the form of home repairs, or as I said, for some incremental development activities. But to get into a full-fledged financing, they need to definitely develop their skill sets, develop their processes, develop their policies, and then only they can definitely go forward. But I'm sure they can play a role, and that is the way it should be going forward.
Thank you, sir. I'll actually go back to Mr. Ramesh. And sir, what do you think are your challenges to scale?
Yeah, I think that is the biggest challenge. The concept is not an issue. The proof of concept is not an issue. All that has been tested. What really happens is that the financial ecosystem that we have banks, we have other well-established lending institutions. They are willing to support, collaborate, finance, or provide BC arrangements, whatever it is, some kind of partnership for well-established products. But when the product is innovative, it is new, it is first time in the market, there are no takers at all. And so there is absolutely no support unless you can mobilize all the funds that are required for this purpose. And go forward and march ahead. Yeah, march ahead. You can create that proof in a limited scale, but for one institution to not just design, innovate a product, but also to mobilize all the money that would be required to address such a large challenge, I think that is not a very feasible proposition. This is where we need to create that ecosystem for innovative products in the shelter area, where one larger number of players can do the delivery on the ground, and that is where the microfinance institutions come in. A product like a roofing loan product is something that with some training they would be able to handle, to be able to execute, to be able to deliver, and the size of the ticket is something that they are comfortable with and they know how to handle and how to collect the EMIs for that kind of a size. And if there could be in the ecosystem lenders who would be able to provide the financing for that, what is the lender really focused on? That his money gets him a fair return, the quality of credit is good, and he gets back his money. If there is a proof of concept, if there are people willing to take care of the responsibility of the lending, and then we have mechanisms like FLDG, etc., the lenders should be willing to strike out and experiment with new products and see how well that works. And if they get a fair return, if they get a good quality of portfolio and their money back regularly on time, as with their other products, there should really be no hesitation. But there is still tremendous hesitation. There is a complete hurdle in really supporting new products or in lending to new products. And that is where we need to really create the ecosystem.
One point to this. In fact, we have now in the process of supporting, I mean, slightly not, it's outside the housing activity, but then something similar to that. We are now in the process of trying to develop a product for health. And everybody accepts that health is a requirement. And if the health support is not provided on time, that will directly impact the productivity of the person, and it can even affect the repayment capacity of the person. So we are in the process of now developing a product for that. We had a workshop other day. We had some 6-7 MFIs were there, and they were all fully convinced there is a need. But how to go about, who should start first, as Mr. Ramesh said, So that kind of a conundrum is there. So that in case of housing also, everybody knows that housing is a requirement. Housing is a must for everyone, and it's definitely, nobody is going to run away after constructing a house. Nobody is going to run away. But still, to make a beginning, there is probably some kind of inertia is there. Probably some kind of a external support in the form of some comfort being extended. That could be one way of going forward, I feel.
So I'll come to Monaji actually. Okay, ideally we should have also had a regulator refinancier in the room, but anyways, we'll hope Sa-Dhan will play that role post this meeting. But then as an investor, not just in your current avatar, even the past couple of decades, you've been in this whole investing space, impact investing. So how do you look at this conundrum, and how will you look at this opportunity?
Am I audible? Yep. I think the way I think about this customer segment, which is the focus of this discussion, and loosely put as a 1 to 5 lakh loan amount. I think there are some learnings from both microfinance and from micro mortgages, which is affordable housing finance, but basically micro mortgages, which is kind of double the ticket size. But I'll just get into that. But I had a question for Mr. Ramesh Kumar. For the for the roofing loan that you talked about, what was the loan tenor typically?
The loan tenor was 18 months to 36 months.
Okay, thank you. Well, I didn't know this, and actually this kind of underscores the point I was going to make. My guess is that structurally, the most suited set of institutions to address the 1 to 5 lakh loan amount gap are actually unsuited to deliver the right product. And because of some structural issues. See, you can't take any customer segment, the highest income to the lowest income, etc., and everyone in between. Unless you are, unless the product design is conducive to, the end use, loan tenors, interest rate, affordability, it's the heart of the matter. That's on the one side. So, so there's a funding related structural issue, and there is a security related funding issue. Why the micro mortgages segment, which is double this loan amount, have taken off is because those institutions have managed to address both of this. So customer credit worthiness is not the question, right? So it has been a question over the last 15, 20 years. Different parts of the market, different types of lenders have managed to address it. And there's enough demonstration of that, and we have, thankfully, in this country now so much, fantastic talent on the entrepreneurial side, on the entrepreneur side, to come and address that challenge. Plus, we have digital rails for, all kinds of financial, transactions that's not the issue anymore, whether you're talking about 1 lakh, 5 lakhs, 10 lakhs, whatever. The issue is on the mortgages side of, can you deliver, why should a customer who's basically so far successfully repaid sub 1 lakh rupee working capital loans in the form of microcredit be made to pay a housing loan within 36 months? Why? It goes to the heart of what an institution that's willing to provide that product to that customer is able to offer. And so you have to fix that funding issue. And you have to fix also for this lender the security and the credit issue. So I think in both of so the funding issue, I believe, if the regulators and the right kind of constituents in the market, people like SBI, etc., we have such large banks with the right motivation to do this, are able to address it. The small finance bank community, so the funding issues can be addressed with, support from Sa-Dhan and all properly. What's really complicated is the security aspect. And again, because of the positive entrepreneurial drive, people take things like possession of an occupancy as surrogates for security. That can only go this far. I mean, it can go some more distance than where we are today if you address the funding issue. But like what MHFC did in partnership with no, I'm not talking about that. I'm talking about in partnership with the development authorities, with municipal corporations in different states. And I was privy to some of those discussions because my earlier organization, we were a shareholder in that. That fund was a shareholder. So essentially what a really impact-driven, inclusive finance institution in the housing space can do is go to different like-minded entities in the housing space, like development corporations and municipal authorities, who have the right over or the ability to smoothen the security challenges, the ownership rights, and create a real mortgage. Those are flashes in the pan, but they are important. Examples of what can be done at a larger scale. So, and so structurally, that needs to be addressed, to my mind, in order to provide a reasonable tenor loan at an affordable price and treat it like a regular housing customer.
Right. Yeah, thanks. Actually, you brought that SFB thing, which also goes back to what has happened, say, in the last 20 years, right? Like, there used to be a time pre-Andhra happening. Like, some of the earlier larger NBFC MFIs, who are all now, most of them are SFBs, had tried housing loan products, right? Like, they were basics at this program, NCR, where they self-built incremental and stuff like that. And then Andhra happened, and then the limitations happen, like the whole.
No, I would like to say no product for this customer segment has been properly designed till date. I don't know, I'm sorry ma'am, I don't know how SEWA is addressing it and whether I would love to hear more. But
I will.
especially,
I will.
but pre-Andhra and to my knowledge, much of what has happened is not adequately designed because of these structural issues.
Yeah, go ahead, Shruti ji, and explain your product design process.
No, see, it's more, before we even get into the product design part of it, what actually is the crux of the issue? The point is that people need housing finance. Now, housing finance per se, the mortgage finance in the formal analogy means you need to have the transferability of the title or the tenurial rights with those families, with those households. Now, when we talk about informal segment, therein comes the informality of property titles. And in India's federal structure, we all know that tenurial rights and the revenue records are state subject, are not driven by the central policy. So each state, wherever one is operating, one has to look at what are the statutes which are made available by the local government, by the respective state government, which provides the tenurial security to this informal segment. Therefore, the point is that even if you focus on the sub 5 lakh or sub 6 lakh or sub 8 lakh kind of ticket sizes, the affordability is there. People are earning, they have already established their credibility because they have been taking multiple loans, multiple 6, 7, 8 time cycles of loans from microfinance. That is not the issue. The point is the tenurial rights. So you have to work with the local state government, the local bodies, whether it is municipal corporations or the development authorities, to understand what are the gaps in those particular tenurial rights. Most of the time, the property title chains are incomplete. The informality arises out of those incomplete property title chains or imperfect property title chains. So you have to handhold those families. These are not group loans. This cannot be group loans. It's an individual product, and each household has to be ready to take this kind of loans. So what in our scheme of things, what the way we look at it and the way we design our product and the way we look at the credit underwriting, which is where I would like to address Mona's issue about the underlying risk and the assessment of risk, and how do you then design the overall aspect about the rate of interest, about the tenor, about the completeness of property title. That has to be part and parcel of your credit underwriting process. So the way we look at it is, while there are families who are on an average earning about 25,000-30,000 rupees per month, after taking care of all their fixed obligations or whatever loans that they have taken from microfinance or any other means, what is the remaining portion which is available for them to service these kind of loans? And thereafter we set the tenor. At the same time, we help these families to complete their property title chains, and this requires continuous understanding of the tenurial rights or the local statutes which are available or are provided by the state government. So we have done it. It does require a lot of hard work. It's not a simple cookie cut kind of a model, and each state has its own challenges. So for example, what Habitat for Humanity is doing in Odisha with collaboration with Svatantra housing is something very different. The state government has already, through a mission called Jaga Mission, has provided this kind of tenurial rights. Now it's about understanding the income levels. How do you underwrite the income of the family, whether it is the woman of the household and any other co-borrower, and thereafter you provide those kind of loans. So it's possible. There are many progressive steps taken. For example, Rajasthan at one point of time was the most progressive state. They took a very simple decision that whoever is residing in that particular property, they are known as pattas. Pattas means the leasehold in English language. So if anybody is residing in that patta or that property, they will be given those pattas. Those pattas had to be registered, and thereafter you can mortgage it. Similarly, states like Madhya Pradesh, states like Uttar Pradesh have also taken those progressive steps of regularizing the title. Many states have even gone ahead and digitized these revenue records, which makes it easy for mortgage financiers like us, affordable housing finance companies like us, to go on those websites and see whether those pattas or those properties are actually existing on the town planning maps. And these are, so basically the point being that these are the steps one has to take as a mortgage lender to create that kind of a very systematic credit underwriting, and therefore arrive at a rate of interest which is risk based, depending upon the income levels of the family, and at the same time what risk one needs to underwrite, taking care of different kind of property titles. So
thanks Shruti ji. That's an elaborate, that's an elaborate, but then basically the crux is like it's difficult but possible. Is one way to look at it. Yes, sir. You want to add something quickly? Yeah. I'll come back to you. I'll just go to Mr. Mammen again. Sir, here, like this current, the recent change in the way in which the qualifying asset has been defined. And while we know that the security thing is a challenge which needs to be addressed. But then I'm just going back to the opportunities for MFIs here. The revised definition of qualifying asset, the relaxation in the income eligibility of the family, right? Like what can be targeted by the microfinance institutions. Do you think it will open a larger opportunity in this space?
Yeah. I fully agree with you. In fact, the new regulatory norms in which the qualified assets have been now, I would say, a little more diluted. Earlier it was 85% of your, but there is a slight difference, slight catch in that. Because of that, some of the MFIs find it difficult to adhere to the new norms also. That also I would like to make a mention here, because earlier it was out of the net assets, 85% of the net assets. Now it is 75% of the total assets. So in effect, the change is very minimal. But then yes, it gives an opportunity for the MFIs to go for non-qualified asset, and in non-qualified, and that is a way. In fact, RBI is one of the intention of making it liberalizing that part was to ensure that MFIs will take up much more commercial activities through that window, and ensure that their viability is taken care of, and they get a better return out of it. But then I'm still not finding that kind of MFIs taking advantage of that. Even today, most of the MFIs, except barring a few who are below that 75% cutoff, otherwise most of them are above 90%. 90% of their assets are qualified assets only. That means they are all for the microfinance activities only. So they find it much more comfortable working in that environment. So as I said, there is a need for a mindset, there is a need for some kind of a support system which can help in changing that mindset. Because if suppose a kind of a comfort is given in the form of a guarantee or some kind of a support like that, probably they will be tempted to take up a view on that, financing long-term investments like housing, and then slowly they can get into that. But there is another challenge is there. I just want to flag that also. See, right now, the funding is an issue. Right now, MFIs mostly get their funding from the banks or NBFCs or development financial institutions. They are all short-term in nature. They are all of the 2-year tenure or 3-year tenure. It doesn't go beyond that. For housing, if you need to have a long-term financing, you need to get that kind of resources also. National Housing Bank is supposed to be providing that kind of a funding support, but in MFI is unfortunately not categorized as a eligible entity for borrowing from National Housing Bank. So that is another challenge which is also faced by the MFIs, because you can't borrow short and lend for a long-term period, you know. So But yes, your question, I agree with you. There is an opportunity available to the MFIs, and you also find a way of changing their mindset to go for a long-term investment and ensure a better investments happen in the housing activity.
Yeah, Mona ji, please. Yeah.
See, on the regulatory side, since you brought up things like, what NHB has done or can do, I just want to share what in the affordable housing finance companies that are not catering to this segment, but really what we can learn from there, or what's their own challenges still there, still being faced. As you know, the housing finance companies need to have a certain minimum percentage of assets in housing, and the rest can be non-housing. And it's like 2/3, 1/3.
Types.
And but the fact is, there are, and a lot of the scaled up companies such as Aptus or Avas, etc., housing, HFFC, the listed companies I'm mentioning because their data is public, you will find that they have a fair share of non-housing loans on their books. If you speak to those companies, you will realize that a good chunk of that 1/3 loan, and 1/3 is not small when you have 15,000 crores and 10,000 crores in assets, which is what they have. A good chunk of this 1/3 non-housing loan is actually housing, which they're forced to book as non-housing because of requirements such as approved plans by architect or whatever, or the local authorities, etc. So we have lots of issues on what is considered good tangible security for a bona fide housing loan in this country, which needs to be addressed.
Right. Yeah, so that's another regulatory thing, sir. So maybe we should have a sitting after this. Maybe as Sa-Dhan as well, we should kind of represent to the regulator. We can even position this as, if we are expecting microfinance institutions to play a significant role, we need these kind of relaxation. Mr. Ramesh Kumar, please.
Yeah. Before I come to the other point that I wanted to make about this taking the household income, we have been doing this from 2013. The household income has been taken as the income for the housing microfinance loans with which we had been giving. So this is a concept that we had adopted and found good for the last 10 years. Okay. Now, what Mona said, I think there are a few things I want to make. We can't easily dismiss the issues as design issues and design problems and this thing. Just as the microfinance financing intricacy itself is dismissed as a cookie cutter model, I think the lenders also adopt a cookie cutter model in their lending approach to the borrowing institutions. And they need to really understand innovations, understand the variations which would automatically happen with innovations, and be able to accommodate those. Since that is not happening by the conventional lenders and the investors, that is why a lot of new products, innovative products, needed products, where the proof of concept of the product has been established, proof of demand has been established, they still are really faltering, or they are not, they are in the wilderness. So I think there is also a need in the ecosystem to change the mindset of the lenders and the investors also to look at it from that point of view. So yes. I think that again becomes very important.
Yes, Shruti ji, yeah.
So, all the points, whether my three co-panelists made, are very, very relevant. One is the focus on other innovative ways and how do we imbibe that as a mortgage finance, whether it can be sort of packaged or packed as a mortgage finance, which typically happens in, I would like to draw an analogy with these water and sanitation loans which were given earlier through microfinance initiatives and are now also being done through the affordable housing companies. Now we have been arguing that as part of mortgage finance, they have to build water and sanitation, or whatever water and sanitation is there which is dysfunctional, they need to do it. So similarly, if we are to look at this kind of other sub-components of mortgage finance or a overall construction, if one looks at it, if it is a roofing mechanism or a solution through roofing, or a solution through anything which is more providing them more access to clean energy systems, or making them amenable to more energy efficiency part of it. These can be bundled into a housing finance product. That's what I feel should be done, rather than burdening a microfinance institution to provide a long-term loan, which typically neither their liabilities are geared towards it, because most of the time their liabilities are for a 2-year, 3-year tenor. Here in affordable housing space, whether we are catering to anywhere in the ticket sizes of 4 to 8 lakh, or 8 lakh and above, or 12 lakh and above, the institutions which Mona referred to, Aptus or Avas, these are typically 10 lakh and above kind of ticket sizes. Aptus, of course, is 5 lakh, but focusing on a different geography altogether and a very niche geography. But having said that, these are the institutions, and the ones who are people like us and many of us, we have the asset liability part of it, which is where we are able to access those kind of loans of on an average tenor of about 6 to 7 or 8 years, and which is where some of these products should be bundled. So my point is that while innovation is important and innovation should happen, if we can find ways to collaborate, because going forward, that is the way in which one can scale up. We need to find those ways and means of collaborating, to work together, whether as someone who has developed this kind of innovative product like Mr. Ramesh, or we can even look at partnering with microfinance institutions and working out models of co-lending, which is very well, of course, provided by regulator as well, whether it is RBI and NHB, of course, supports it. So these are ways and means with which one can look at developing the ecosystem, which is what Sir is referring to, and hence driving both that microfinance institution to scale, at the same time the affordable housing institutions like us also to not only focus on a particular segment, at the same time achieve that scale.
Thank you, Shruti ji, for bringing that co-lending point in terms of so Mr. Mammen, I was sure as we speak, some co-lending partnerships have already happened between MFIs and large banks. But then as Sa-Dhan here, do you want, or do you see yourself kind of playing a more structured role of coordinating or kind of curating some co-lending partnerships between MFIs and banks, and kind of using that as a means to scale, as one of the means? I'm not saying that's the only means, but then this whole thing of capital asset liability mismatch, can that be one of the solutions?
Definitely. In fact, more than co-lending, I feel BC is a much more possible way of doing it, because in co-lending you need to still put in some capital from your side. 20% capital has to be put in from your side. In a BC model, you don't have to put any capital as such, only the service is being extended. So BC is a much more workable solution, and it is happening also. Some of the MFIs are partnering with NBFCs and banks on a BC level. Co-lending, if somebody is interested, also is possible. In fact, as an association, as a network of MFIs, we have been trying to, because especially for the smaller MFIs, finding funding is a major challenge. Not only for housing, for any of the lending activity. So one of our role is to facilitate that kind of a funding arrangement happens. So that's why we started from last year lenders MFI interface meet we do. Last year we did it in Bombay. This year also we are planning it in the month of January. We have also done couple of meets through online mode, bringing state like banks like State Bank of India and Punjab National Bank, and trying to bring the MFIs on the other side and trying to bring them together. So one of the product they used to discuss in these discussions were either co-lending or BC kind of a funding support, apart from for term loan. But term lending is a little more challenging, but BC and co-lending model would be much more easy and workable thing. Among that, BC would be a better option, I feel.
Thank you, sir. As we go for these kind of things, Mona ji, innovation and technology, right? Like, see, we can't do the same kind of inputs and expect a drastically different output. Like, we definitely need to start looking at things differently, innovate. Technology, of course, is one of the tools that we have. So how do you look at this space from these lenses?
See, on housing, especially when we're talking about incremental housing or incrementally sort of loans for refurbishing or upgrading housing, one of the process tools available with lenders, which helps in risk mitigation, is tranched lending. Right, Shruti will agree. So this is, if you do tranche lending, end-use monitoring is better, etc. Now, it becomes, I suppose, more challenging if the loan amount is smaller to do it efficiently, and you have to keep an eye on that. I believe in that area, and this applies to whether you're giving a 10 lakh rupee loan, 5 lakh, or even a 30 lakh rupee loan. Now technology is possible can be possibly leveraged to reduce the dependence on people, and so we are currently, my team, my colleagues and I, even though we are a fund and we're not operators, but we think deeply about cracking open unserved market segments, and a colleague of mine who has a strong tech background, we are advising one of our potential portfolio companies on how to leverage spatial images in just conducting stage-wise construction kind of checks, almost completely digitally. So yeah, I mean, that's an idea because the affordable housing market, especially in India, is largely self-construction. Right? And you can call it incremental housing or self-construction or whatever. It's basically self-construction. If we solve OPEX problems, even fraud problems, etc., using technology, that will be a huge benefit. And I think that's the direction in which lenders should be working, in my opinion. And another thought I had based on what Mr. Mammen said earlier, if I think back on 2004, 5, 6, that period when microfinance wasn't as big as it became, maybe 5 years after that. Funding was a challenge then, right? So tenor wasn't the question because we were talking about 1 year mortgage, 1 year microcredit kind of programs, but bringing in mainstream banks so that the floodgates of lending could open required certain bonds and pioneering kind of structured instruments to be created in order to demonstrate the credit worthiness of those products, those institutions and products. I would reckon to break the problem of tenors, which you very rightly talked about. I mean, why is a lending institution lending at 3 years? Because that's what their funding is. So institutions who have done this in the past successfully for microfinance should be called in, or some work should be done to create long-term bonds kind of products for funding housing microfinance.
Yeah, thanks. That's another point for Sa-Dhan, I guess, after this meeting, sir. Your list is growing. So I'll probably ask Shruti ji, thanks for those comments. This is on women borrowers, right? Like almost all of them are women borrowers for you. So what has been your experience, and in terms of how you see the involvement, the way the process has gone, repayments, and the overall idea on women-led business?
Essentially, when I mentioned that most of them use home as their workspace, it basically means that women are the ones who are largely using it. The male counterparts in the self-employed space or the daily wage earner space, they do step out of home. So they are the ones who care a lot about their homes. Not that the male folks don't, but they are the ones who are then very keen to see whether proper water and sanitation is there or not. Now, having said that, the big challenge for us has also been that we focus on providing them sort of ownership rights as well. So we tend to make them co-owners or joint owners, which is a challenge by itself, because most of the time the property rights would be residing with either one of the in-laws or with the male counterpart. So one has to engage with the family and make them understand that once you go for mortgage finance, there is a rebate which is available because of the stamp duty rebate if it is in the name of a woman, and if they can take advantage of it. So there are some of the incentives which are available as part of the overall policy framework, which helps us to do it. Other than that, the ways of empowerment, of course, aside from the tenurial rights or the joint ownership right, is also to see whether the loan is transferred in the woman's account, bank account, and not gets transferred in the account of the male counterpart. So we try to do that. We also focus a lot more on various initiatives of trading, whether it is not the regular financial literacy, but financial literacy combined with digital literacy as well as legal literacy. So those are the aspects with which one can engage with the customer, because that customer is going to be with you for 7, 8, 9, 10 years. And while Mona did mention about the overall use of technology in the operations of the housing finance company, the other aspect of using the technology is also to encourage them not only for disbursement but for the payment as well. And
Right.
UPI these days become huge.
Yeah.
It's practically used by everyone.
So how has
So-
been your experience? Collection, UPI, adoption to these digital?
People are very quick at learning all those tools and have been using it pretty extensively in terms of the ACH, ECS registration that we have got so far. And we have also started getting the payments through UPIs.
Great. So these are practitioners telling you, so you should, yeah, this works actually. Mona ji, like, how do you impact investing, right? Like, see, we've said this enough, like, this business makes business commercial sense even otherwise, right, Nick? But then you also see the impact, direct, indirect. So how do you see we should see this from the lens of impact investing, ESG, maybe in the next decade? Because these are some of the things which will keep coming up, and like there needs to be a constant improvement as we keep going in this lens as well.
In terms of how the investors can influence
Yes,
more work in-
influence, and what you would like to see in terms of practitioners and businesses and lenders per se.
Right. Well, I think investors per se are not the best people to ask for good ideas of startups, because we're only good at like looking at a great idea, hopefully, and saying, yes, that is good, but can we come up with good ideas? But if I was to put across a very simple sort of statistically based experience, every time we've had a major innovation within the financial services space, it has been done by, I'm talking about major product innovation, it has been done by a specialized entity or an entity focused specially on that.
Right.
So if we believe that housing microfinance is of course it's a big need, but it's a big opportunity waiting to be cracked in a way that microcredit was done, the way micro mortgages has been done, the way MSME finance has been done. It has to be pursued sort of in a very secular, focused way by institutions that are doing just that to begin with. And then, others who can, come in later can scale it and take the idea forward. So my sense of this is that, can we expect MFIs to also start doing this as part of their 25%? Can we also see like a real scale up through SFBs? Can the affordable housing finance companies of today that have scaled, that are focused on double that loan amount, can they do? Yes, everyone can do it, but really where will the breakthrough come from? My gut is from a company, from institutions that are just obsessed with this, and they'll do it.
Great, thanks. So I'll come for one last question, but then I'm giving a heads up to the audience. That will be the last question. We'll open up for Q&A from the audience. Mr. Mammen, I think this will also be the summary of the session in itself, or the key takeaway for us. As Sa-Dhan, what do you see as a role for yourself through MFIs in extending housing credit to this 1 to 5 lakh segment, or the segment which we are talking about today? What will be we as Sa-Dhan working on the next coming year? Thanks.
See, as a association of microfinance institution, definitely I feel we have a role to promote housing at the lower strata of the society, which is the need of the hour. There is no doubt about it. So, as microfinance has been able to reach to the last person in the country, the last and the least, we say. Similarly, housing has to reach to that. And microfinance, it is nothing, I mean, no other institution other than microfinance will be able to do that. That is also a fact. So how to get them into this job? That is the only challenge we have. So a couple of things which I feel that would be the takeaway from this discussion would be that, one is that probably we should look at working with the National Housing Bank and ensuring that a separate line of credit is made available to the housing microfinance institutions who are interested in getting who are interested in doing the housing financing, number one. Number two is that what kind of a comfort facility can be extended to start with, at least to encourage the microfinance institution to go into a new innovative financing mode. So what is that we can do? That we can work out with probably with the help of some of the I would say like institutions like SIDBI, NABARD or somebody like that. We can look at working with them and see how best we can do that. Third is that, of course, the point which we said that probably how they can become more focused on to this microfinancing, housing. They can become more specialized in housing financing. Should there be a different category of microfinance itself doing housing?
On that note, maybe we should end the session, but then it's a valid question. So, okay, if I have to try to answer that, maybe we don't want all the MFIs to be doing micro mortgages or micro housing finance, but then someone who has the appetite for this and say like, okay, fine, like we are the ones who will be the early movers, and then you work out with a smaller group of them and then make things work for them with the regulator, with the supervisor, with the banking systems, with impact investors, and curate certain proofs of concepts, demonstrate that, and then we scale it with other organizations which can pick it up. Maybe that could be one of the takeaways for this. You've done it in the past, like Sa-Dhan has done it in the past on and off, so maybe we will revive that practice and see if we can bring in a micro housing finance practice within Sa-Dhan. Thank you, sir. Thanks. On that note, I think I'll thank the panelists for their time. But then I can open up the floor for questions, please. I'll get a mic then.
So hi, good afternoon, good evening. Thanks for a wonderful session. I'm CEO of Satya Micro Housing, and we have seen the affordable housing finance journey currently in the country, mostly skewed towards the western part of the country and southern part of the country, which generally, NHB emphasizes L-shape, housing penetration in terms of financing. Large part of the country is still unserved in terms of financing need of affordable housing. If you talk about the east and the below that, any thought towards that, because microfinance institution has done wonderful job in those territories. What is the thought process of the August panel to extending housing finance, be it formal and affordable and the micro, whatever you can say, and what is the approach towards the green housing, which is largely made by the muds and using bamboo and all things. So this is just a thought. If you can highlight something on that, thank you.
Yeah. To preface the answer, see, microfinance traditionally has been doing a job of providing financial access to underserved segments for a long time. I think we are in that inflection point where microfinance needs to move from the financing and the meeting the urgent need for financing to meeting the important needs of financing. We need to move microfinance more towards the important areas of education, health, and shelter, and how the microfinance institutions can play a bigger role in each of these areas. Coming specifically to the housing part, I think like what Jiji said, we need to rope in more and more of MFIs as BCs into the housing segment, roofing segment, the modular housing segment, whatever, so that their last mile connectivity and outreach capabilities are exploited to meet the unserved needs of this housing segment. I think that is a very important approach. So somewhere willy-nilly, they will need to come into the ecosystem of the housing finance as last mile BC providers. I think that is where probably that would make a difference.
In fact, this is a very good example of how housing can be promoted by a microfinance institution. Satya, as a successful microfinance institution, has started a subsidiary or offshoot of its exclusively doing the housing act. So it's a Satya housing finance company, which is mostly looking at that segment of microfinance borrowers.
And about the green segment, I think I will just share my personal experience with housing microfinance companies, where we tried to introduce green concepts in terms of whether it was roofing at the solar, the panels on the roof, or these gadgets, etc. But ultimately the cost factor and the serviceability factors of the gadgets, these always came in the way, and there was tremendous resistance, and it really didn't work. Till such time the cost really becomes very affordable and sustainable, I think it will be difficult to push this very much in the very near term.
Thanks. I'll actually rephrase this question slightly because I think it's still not hitting. Like, broadly, the first part of the question was north and east are grossly underserved. Like, how do we overcome that, right? Like, so I will probably take answers from what. Okay, so please answer.
He has been part of the CEO's meeting at NHB, so ideally he should answer that question. So, see the point which I mentioned earlier, north, again, there is a lot of efforts which are going there, but the underlying assets, which is what we have to underwrite in terms of the property titles, how well kept are they, how well digitized are they, are we able to get those kind of technical and legal reports from our vendors? In these states that he is talking about, the L shape that he is talking about is essentially starting from West Bengal to going right up to Warangal there, down there. And that is the belt of Maoists. I mean, I don't want to start a debate, political debate over here, but that's the belt which we are talking about. Who is going to give us this kind of legal and technical vendor reports? Who is going to give us the report on basis on which we are going to underwrite those loans for 7, 8, 10 years? And what are the other states which I spoke about have made all those efforts. Now Orissa has made that effort through Jaga Mission, so perhaps there is an opportunity over there. But yeah. If we talk about state like Bihar, where microfinance is immensely successful, but why housing finance is not so successful? It's more rural than urban. And where are the revenue records? So that's the point which we have to, I mean, I've been very vocal about it too, even with NHB, that you want us to go there and you want us to take those risks, but where is the fund available? So I go back to his question, and even Mr. Jiji's question, where are the funds available for the institutions like us to take those risks? So,
Yeah, this is Justin. Thanks for referring to Jaga Mission. And we have initiated a PMAY. How do we help the government to complete? We have seen enormous unfinished houses. I don't want to get into the data. All of us, we know how much of unfinished houses. So we started this journey by introducing the housing support services. I completely agree with all of your point. The success of, how do we reach out to more people? The solution is at the part of partnership. Without bringing the 4 Ps, we always promote people, private, public. The government doesn't want to do anything with the private lending. They have a lot of issues. And at the same time, the people don't know how to deal with the government. And where do we fit in as an NGO or a civil society? So we are successfully able to bring the government, take the government subsidies, and bringing Svatantra on board with us. And the last 1 year, I think we are able to serve 500 families. Just wanted to give an impact. The state has an incentive scheme of 20,000 if you are completing within 6 months. The state average was 10%. After we intervened, 49% of people were able to get the 20,000, which is a huge support for the families. I think there are a lot of solutions available. I think the private people, public, the P partnership is very critical for reaching out to the mass. That message I wanted to leave. Thanks.
Thanks, Justin. Anybody questions? Anyone next? Yeah, the gentleman right there in the middle. Next. Yeah.
So, good evening, everybody. My question is to Shruti ma'am. I would like to understand from you, ma'am, with SEWA's experience typically, how do you able to retain the customers which is disbursed? Because typically in the affordable housing, what we have seen in past is for the first funding, typically we take the risk when the track record is established, etc. And then the big player comes in, then the loan goes for the transfer. So how do you retain in that space? Because we are doing the heavy lifting and then somebody else takes the customer at a later stage for a lesser rate. So how do you, whether do you have this sort of challenge, part A, and part 2, if yes, then how do you sort of address it?
no. So a very valid and very pertinent question. We all of us are facing that challenges these days. So whether it is through any means of engaging with the customer, whether it is through literacy program or anything else, the lure of having a lower rate of interest, and therefore once you establish a track record, that concern or that challenge of that customer being poached by a larger institution is always going to be there. And we do face it. It's not that we don't face it. We do have those kind of balance transfers which are happening, or foreclosures which are happening in the name of balance transfer. Because typically what happens is that the game, correct? If it is a foreclosure through own funds, then you are not able to charge any kind of prepayment penalty. If it is a balance transfer, then you have to do it. So to answer your question, 1A is that you continuously need to engage with your customers, try and see what kind of other requirement that those families have, and there are 2 angles to it. If you are yourself able to meet those requirements through a top-up loan, you should do it if that customer has a good track record, or if they have any other requirements, for example, what Mr. Ramesh said about roofing solution or any other solution or green technology solution, then you can always find a collaborator or a partner and provide those kind of support. I think that is the way forward. That's the only way of having that kind of customer loyalty.
I just wanted to speak. I am from Odisha again. Along with this Jaga Mission, Government of Odisha has come up with another loan product very specifically to complete this Pradhan Mantri Awas Yojana both at rural and urban area. So whatever amount they get from government as a Pradhan Mantri Awas Yojana, under that, government is coming up with came up already. They had consultation. They had called various stakeholders, including OSAPI, to have a consultation on this product. In this product, they are coming up with 1 lakh additional loan, 2 lakh, 3 lakhs kind of thing. in which they will be providing this loan to the poor households who are getting Pradhan Mantri Awas Yojana, and they will be completing that one. So why I am talking this one is that at best 2 to 3 lakhs they require to complete their houses, just to complete supplementary support. So we are talking about BC model. If MFI can also function that way, as of now, MFIs are able to give up to 1.5 lakhs of rupees to 3 lakhs rupees to microfinance loan. Why can't they can be acting as a BC to Housing Finance Bank or any other support agencies to online this program, the loan, so that the poor people in the urban as well as rural area can complete their houses. That is what my request is, just to take Sa-Dhan स्पेशली सर आपके लिए BC की कुछ अगर हो पाएगा MFI के लिए हाउसिंग स्कीम के लिए, that will really take further this housing scheme and successfully complete the houses.
I agree. In fact, the non-qualified portion of the financing which an MFI can do, they can look at that as an option. Otherwise, as a BC, since the asset does not rest on the books of the MFI, it's only a service they are extending to the financier. I think that's definitely a better model to follow in extending the. Yeah. Yeah, definitely.
We will have many more meetings like this.
Thank you.
Yeah, we can have many more meetings some other day. For today, we are stopping here. And just to show us a token of thanks, I would now request Mr. Pramod Kumar Paliwal, Chairman and Managing Director of Earth Microfinance Private Limited, to honor our guests. Mr. Kandan, who is the moderator, he has done an excellent job. Please. Mr. A. Ramesh Kumar, Chairman and MD, LaRaksha Impact Finance Enterprise Private Limited. Ms. Shruti Gonsalves, MD and CEO. Wait. Ms. Shruti Gonsalves, MD and CEO, SEWA Grih Limited. Ms. Mona Kachhwaha, Partner, UC, Impower. I'm sorry, I didn't pronounce it properly. And we have kept Jiji sir's gift separately. We'll give him some other time.
Yeah, please. All right, then. This time. He's on the panel.
No. We'll felicitate Nupur Maroti, Manager Housing Finance Systems. You please come on the dais.
Jiji sir, you've been taken for granted.
Jiji sir is from Sa-Dhan only. She has made the lead presentation, making housing markets inclusive for the low-income segment.
Come, let's have a photo.
Please step down for a group photo. ये एसी बंद कर सकते हैं एकदम मैं करवा देती
Pleasure.
Just to tell you, tomorrow the session starts at 9:45 a.m. and we have a very interesting session. It's a fireside chat with Tamal Bandopadhyay and Montek Singh Aluwalia. So all of you, please go and have a good sleep. good food, and come back tomorrow before 9:45 a.m. By 9:30 actually. Yeah, sir. Tomorrow, we'll start exactly at 9:45 because that is the mandate from Mr. Montek Singh. So please be on time to experience this fireside chat.